Good afternoon, ladies and gentlemen. Welcome to FSDC's Industry Exchange Series. We are launching a report calling for some changes in the insurance industry. My name is Rocky Tong, and I am a Director and Head of Policy Research for the Financial Service Development Council. Today, we are very honored to have Mr. Damien Green, board member of the FSDC, who also is the convener of our Human Capital Committee, who happens to also lead our working group for this paper. Together with him, we have Ms. Winnie Wong, who has been with the FSDC for a very long time. Fred Land is also a member of the FSDC, and Ms. Orchis Lee, General Manager of Genry Hong Kong's branch. She is the immediate past president of HKFI. So you can see that we have a very diverse group of professionals, leaders of the insurance industry with us, from insurance company with life being the primary business, to others with general insurance being a primary business, to one that is a virtual insurer, two virtual insurers and a reinsurance company with us. The reason being, that we have to have this very broad spectrum of representatives with us today is that insurance is a very important subject to Hong Kong's financial services industry. It also represents about 3.5% of our city's GDP. It accounts for almost 10% of the total AUM being managed here in Hong Kong. So going forward, how are we going to go about it? How are we going to make good use of the capital that is being managed in Hong Kong? And how can we actually strengthen our advantages over the other economic centers around the world? Well, let's hear from Damien. Damien is going to provide us with an overview in the next 10 minutes, after which we will have a panel discussion with the representatives sitting together with me. And afterwards, we would love to hear your thoughts and questions. Please do input them in the Q&A box. So for now, Damien, the floor is yours.
Thank you, Rocky, and very good afternoon, everyone. And thank you for taking the time to join us today. It's timely to note that the 37th edition of the Global Financial Centres Index was released a week ago. Now, in the survey, Hong Kong consolidated its position as number 3 ranked financial centre globally, but was also ranked number 1 globally for specific industry sectors, being investment management, finance, and importantly, insurance. Rocky mentioned some of the economic contribution of the insurance sector in Hong Kong, and I'd like to add to that in terms of contribution to the community that each year the insurance segment pays well over 300 billion Hong Kong dollars in claims and benefits back to customers, and these numbers are growing at a healthy rate every year. I'm pleased to say that there's strong alignment between the private sector, government, and regulators in Hong Kong, that in spite of its historic success, the insurance segment in the city has meaningful opportunities to continue its robust growth, including diversification opportunities into existing and new insurance sectors. So today, we're pleased to be here to outline and discuss the Financial Service Development Council's policy recommendations to cement Hong Kong's role as a premier global insurance hub. Moving to slide 2. There are 3 broad areas of focus for the paper that's being released today. 1, growth and diversification in light of opportunities and challenges. 2, how insurance capital can be unlocked to support the growth of transition finance in Hong Kong, that is, supporting and accelerating the transition to a low-carbon climate. And 3, accelerating a transformation away from the overall industry's reliance on manual and paper-based back-end processes to dramatically improve customer satisfaction, lower operational risks, and improve efficiency. Moving to slide 3. Recommendations 1 and 2 go to accelerating end-to-end digital transformation in the insurance industry. You'll see in the paper that insurance is entwined with all socioeconomic activities in Hong Kong, so is integral to the city's overall objective to be an advanced digital economy. The Insurance Authority has been very active in this area through the introduction of measures such as the InsurTech Sandbox in 2017 and the OpenAI framework for the insurance industry in 2023. However, significant gaps still exist in terms of expected and anticipated end-to-end digitisation of the industry. These specifically lie in the still heavy reliance on manual and paper-based back-end processing for traditional insurers. This is reflected in the detailed feedback from industry stakeholders and in the results of relevant global industry surveys mentioned in the paper. Areas where there has been insufficient progress in digital transformation include customer identification, claims processing, and customer support, all of which still rely heavily on inefficient and operationally risky paper-based and manual processes and manual interventions. To accelerate change, recommendation 1 is that the IA, with government support, should take the lead in developing a comprehensive cross-sectoral digital transformation roadmap for the industry. The clear goal of the roadmap should be to guide insurers and other private and government stakeholders that constitute the overall insurance process ecosystem to reduce the heavy dependence on paper-based and manual processes and inefficient handoffs to one another. This can be achieved by promoting the development of digital collaboration between stakeholders to improve customer experience and operational efficiency. To enable the roadmap and its implementation, it is recommended that a cross-sectoral task force is established, including a diverse range of industry practitioners, various government stakeholders, and regulators. Now, based on the strong feedback from stakeholders, it is further recommended the proposed task force prioritises transforming the ecosystem of claims processes related specifically to health insurance and automotive insurance, with reference to past initiatives such as open banking, which was promoted by the HKMA for the banking industry to enable much greater customer data sharing whilst also protecting customer privacy. Recommendation 2 focuses in on the need for more efficient, common, trusted and secure golden sources of data to enable customer identity verification across the insurance industry. In light of significant advances made by the government's Digital Policy Office, the DPO, on the I Am Smart and the digital corporate identity platforms, and the aggressive roadmap of development and investment ahead for these, it is recommended that these platforms become the central focus between government, regulators, and the industry, and indeed the golden source of customer identification and central basis for privacy-protected data sharing across the industry. To enable this, it is recommended that there is closer collaboration between the DPO and the Insurance Authority and the Hong Kong Federation of Insurers to engage with the industry to accelerate understanding, comprehensive adoption of I Am Smart and further development of I Am Smart based on engagement and feedback from the industry, and above all, to enable better, more free-flowing, secure data exchange. Moving to slide 4. Recommendations 3 and 4 address how insurance capital can better support Hong Kong's objective to be a regional hub for climate transition finance, as well as acknowledging the UN COP29 guidelines for insurers to transition to net zero. Recommendation 3 recognises that the implementation of the risk-based capital regime in Hong Kong strongly guides the allocation of insurance capital backing insurance liabilities, whilst acknowledging that the HKFI and the Actuarial Society of Hong Kong are in ongoing dialogue with the Insurance Authority on a broader set of RBC-related issues and recommendations. This paper recommends that further capital incentives should be considered within the RBC framework for climate investments beyond the 0.9 incentive factor for approved green bonds, which is currently in place. Other climate change-related products that may be considered for incentives include green loans, social loans, sustainability-linked loans, blue bonds, and blue loans. Recommendation 4 seeks to address industry knowledge gaps with complexities and ambiguity of sustainability disclosure reporting requirements. To address these barriers, it is recommended that the IA could explore partnerships with stakeholders such as the Hong Kong Institute of Public Accountants and the Hong Kong Green Finance Association to develop materials and programs to uplift industry knowledge and engagement. Moving finally to slide 5. Recommendations 5 and 6 address questions of industry growth and diversification. Recommendation 5 points to the significant opportunity to develop and grow the ecosystem for insurance-linked securities, or ILS, in Hong Kong, particularly in light of the city's status as a leading cross-border wealth management hub and the large and growing presence of high net worth individuals and family offices in the city. The recommendation acknowledges the foundational work already completed with the initial ILS pilot grant scheme, which has now been extended, which enables ILS issuers to offset up to 100% of their upfront costs within certain limits. However, the recommendation also recognises the need to accelerate the development of this nascent sector through addressing the still large investor and industry knowledge gaps and the opportunity for additional incentives and support. It is recommended that there are concerted efforts to educate and engage financial institutions, target customer segments, and the community at large on this important emerging segment. Further, to aid market development, it's recommended that government and the HKMA should consider leading the way by incorporating ILS products relevantly into their own investment portfolios. It is also recommended that the elimination of the regulatory minimum ILS investment size altogether would foster more engagement with eligible investors and would lead to greater market vibrancy. Finally, to recommendation 6. Recommendation 6 seeks to address long-standing industry concerns regarding the availability of longer-dated Hong Kong government bonds. Life insurers in particular manage very long-term liabilities and rely largely on long tenor government bonds to back these liabilities to deliver on their lifetime promises to customers. Due to the historic lack of availability of such instruments in Hong Kong, insurers have predominantly invested in long-dated US Treasury bonds to enable adequate matching of their investment and liability durations. It is recommended that the Hong Kong government consider following other key Asian economies such as South Korea and Japan by issuing longer tenor bonds, for example, say 30, 40 to 50-year government bonds, including the possibility of incorporating longer-dated green bonds. This would enable insurers to reduce risks, improve industry sustainability overall, whilst fostering more Hong Kong dollar product innovation in a market where US dollar denominated products have been prevalent. And that concludes my summary of the recommendations. I'm happy to pass back to Rocky to facilitate the discussion from here. Thank you.
Thank you. Thank you so much, Damien. And for those of you reading the slides right now, obviously you can see the cover page of our report, which has been uploaded to our website. So do visit it if you haven't done it already. Now, as I mentioned earlier, we're going to go through some of the panel questions that we have set for each of our panelists. But after that, do let us know if you have other questions, and you can, as I mentioned earlier, put your questions in the Q&A box. Now, Damien, I'm going to stick with you for a little bit first. We haven't covered it too much, like in the presentation, but obviously Hong Kong is a leading insurance hub, partly because of the life insurance sector. It is not only because Hong Kong people sitting here in Hong Kong are purchasing all the policies, but also policy holders from the mainland and abroad purchasing life insurance policies here in Hong Kong. What are some main factors contributing to the dominance of our market, and how can the segment achieve sustained growth going forward amidst all the evolving market dynamics?
Thanks, Rocky, for the question. And I think, just speaking generally, and I know it's resonating with the industry at large, the mainland Chinese visitor segment for the life insurance industry in Hong Kong is extraordinarily important. Is continuing to grow very, very strongly. and will continue to grow. And we encourage, obviously, further investment and support of that sector. I think overall, life is dominant in the insurance segment, representing, I think, around 80% of total gross written premiums, if not more, in the industry. That's been the draw card for Hong Kong. But we need to also grow the non-life segment very, very strongly in order to diversify. And we have opportunities to do that. We mentioned investment securities through instruments like cat bonds and other things is a significant advantage for Hong Kong, and we have strengths that play to that advantage. Reinsurance, captive insurance are also strong plays for Hong Kong in terms of non-life insurance. In terms of life insurance itself, obviously, we haven't mentioned mainland Chinese visitors strongly in these recommendations because I think the pathway is obvious and the support is very, very strong for the continuation of that segment. And insurance companies, regulators and other stakeholders work daily to ensure that that is sustainable and continuing to grow. The practices are sound, etc. And we're supportive of that. Beyond that, I would say Hong Kong has emerged as having a real strength as a provider of solutions to high net worth and ultra high net worth individuals who come from offshore to visit Hong Kong or engage with Hong Kong insurers, Hong Kong brokers, in order to find solutions for themselves and their families, legacy solutions. We think that there's an important opportunity to diversify to Southeast Asian high net worth individuals, to North Asian high net worth individuals, and Middle Eastern high net worth individuals. And Hong Kong's strategic alignment with the Middle East, which has been moving, and the South and Southeast Asia, has been moving ahead very, very well, play to these opportunities. You will see that all of these particular factors, whilst not appearing in the recommendations per se, are covered in detail in the full paper. Thanks, Rocky.
Thank you. Thank you very much, Damien. As a matter of fact, the alignment of interest between the insurance industry and the wider economy is something not to be missed. It's really not that the insurance industry's benefit would only be beneficial to the practitioners in the field, but that it will also have widespread influence on the wider economy as well. Now, Winnie, I would like to turn to you for that. You have been dealing with this business for a very long time, and you run two insurers, licensed insurers in Hong Kong, one being a virtual insurer. So, notably, there are a wide range of insurance products, and it's not only life, as Damien mentioned in his earlier answer. There are all other development of long-term and general insurance businesses that are being critical to the success of the industry. Perhaps you can share with us the overall current landscape of the non-life sector, as well as the pivotal role of general insurance in enhancing Hong Kong's economic resilience.
Yeah, thank you, Rocky.
No, you don't have to.
I don't.
Yeah, you don't. You don't have to.
Okay. Thank you, Rocky. I just want to say a bit more about the current situation, which is a bit imbalanced. The Insurance Authority in Hong Kong has been working really hard, setting objectives to further help enhancing the non-life sector. Damien mentioned a bit about the fact that there are really a lot of opportunities lying ahead on the non-life sector. The current imbalance situation is not normal when we look at other international insurance centers. They are generally a bit more balanced in terms of life and non-life business. And that means there are a lot of opportunities for us to catch up on the non-life side. And in our paper, we mentioned a bit about captive. Captives are self-insurance companies. Basically, the idea is for large conglomerates or some of the companies who have a lot of insurance spend to set up their self-insurance companies to analyze the risks and retain some of the risks. While a lot of the risks, especially some of the catastrophic risks, are still transferred to the commercial sector, to the commercial insurance companies, including direct insurance companies as well as reinsurance companies. So it's a very good risk management tool. And from Hong Kong's perspective, of course, it can centralize and consolidate the insurance placement in Hong Kong so that we can further strengthen the non-life sector in particular in Hong Kong. And if we look at the opportunities up north, there are a lot of SOEs as well as POEs who are well qualified and big enough to set up their captives with the domicile in Hong Kong. And of course, historically, in Hong Kong, we do have quite a number of captives formed by conglomerates in Hong Kong. It's just that they may not be in Hong Kong due to historical reasons. But right now, we believe that we are well placed to house them if they want to set up additional captives in Hong Kong or they want to re-domicile back to Hong Kong. So we understand that the Insurance Authority has been working hard in talking to these potential captive prospects who are interested in setting up their captives in Hong Kong. I think we can just get our regulatory framework more ready and more flexible to cater for the needs of different potential captive clients, making reference to captive domiciles in other countries, and make the entire process, the onboarding process, a lot more efficient and cost-effective for these potential captive clients. And of course, highly related to it is International Reinsurance Center that Hong Kong is also well positioned to play a very important role. Given the fact that we're backed by a world-renowned international financial center, we also have a lot of reinsurance activities going on in Hong Kong, supporting the insurance and reinsurance needs of other countries. So we're talking about C-ROSS equivalence assessment framework, and we are working with the Insurance Authority in pushing for C-ROSS equivalence assessment framework, further extended to cover a wider range of direct insurance companies. So that's the direction, and hopefully that all these efforts will be very useful for driving and developing the non-life sector. And there will be a lot of hope for catering for the some of the emerging risks that are not readily available in the commercial insurance market yet. I think captives can be a very good starting point to support some of the emerging risks of certain industries. We're talking about low altitude economy and EVs and all that. So I think those are very good opportunities for captives to play a role on. Thank you.
Fantastic. Thank you. Thank you so much, Winnie, for sharing with us some of the key highlights, including captive insurance and how reinsurance can potentially benefit the overall sector in Hong Kong. And with that in mind, I must turn the floor to Orchis, who is the go-to person in a lot of conferences and seminars around the topic of reinsurance. Orchis, perhaps you can share with us how reinsurance can further contribute to the sustainability and growth of Hong Kong's insurance industry, particularly in managing complex risk and supporting market stability. Winnie has already mentioned some of those, but I guess with your expertise in this regard, we can learn a lot more.
Sure. Thank you, Rocky, for the question. As a reinsurer, I think it's no secret that we are the party who is supporting direct insurance companies to write bigger, larger, and more complex risks. And we are there to provide the capital solutions and capital optimization to a lot of our cedants. And we more specialize in research and come up with innovative, collaborative products to the market. So I can see from the life insurance side, we're working quite well with all the life insurance partners, and Hong Kong has always been the forefront of innovative products to the market. But on the non-life side, I can also see that there are different opportunities that we can still explore further. One area is how we can bridge the current protection gaps in terms of things like climate change, because I think, for example, extreme weather events is getting more and more severe, and the frequency is always increasing as well. So it is adamant for reinsurance companies to be able to sharpen our models and come up with reasonably priced protection products for the industry, because I do think that especially on things like climate change, it is a very important issue to protect the societal resilience in terms of having the reinsurance and insurance protection to weather through these storms. And another area that I can think of is around new markets and new products. So for example, on new product side, there is more and more call for cybersecurity protection. This area is very new, so even for reinsurance companies, we have to collect more data, do more analytics, come up with better models in order to understand what sort of risks we are reinsuring, and make sure that we have good and sustainable products to the market. And as mentioned by Damien and Winnie just now, we are also working with a lot of new partners from Middle East, ASEAN. So be it for individual policies for these high net worth individuals, or even to facilitate the trades and the business that they bring into Hong Kong. There are a lot of different insurance needs per se. That is quite new to us and not something that we've been doing for the past decades. So these are certainly new opportunities for us to consider.
Fantastic, thank you very much. I really enjoyed how you explained the rise of climate change and risk associated with them. Would allowed us to look for new opportunities by expanding the product scope. And you also highlighted cybersecurity, which, as we all of us know, we see how deepfake and many other challenges financial institutions and just real economy sectors are facing along the way. And so the mitigation of such risk would present to us some opportunities, but let's see, how we can actually address and capture some of those. Now, Fred, you run and co-found, Bowtie, which is a virtual insurer, but obviously you also had experience with other financial services sector, including the traditional, side of the insurance. So you can make a comparison between, how traditional insurers play versus, how a virtual insurer like your good self actually plays the digital journey. But overall, perhaps you can give us some highlights as to how the industry is adopting the digital initiatives across various value chains and how to fully digitalize the workflows. And perhaps you can provide us with a very honest statement as to what we have done well and what we can do better going forward.
Sure. Well, thanks, Mark. I really think we have done a lot in adopting the new digital technologies. If you look at a lot of insurers right now, right, we have implemented e-applications, the e-signature for onboarding. We have built amazing digital tools for agents, especially after COVID, right? A lot of these are a lot more advanced. It really improved the way that not just efficiency, but also user experience is serving new customers. From a regulator point of view, right, the IA has introduced a number of new initiatives like the insurance sandbox, the fast track scheme, and the open API standard that I heard we have done almost like 30 use cases already. And also the cyber resilient guidelines to make sure that the way that we adopt digital is safe and proper. There's a study from SIA Partners. It's actually a global consultancy firm that analyzed more than 80 digital insurance companies across the globe. And the way they look at the digital journey, right, end to end, they actually evaluate the user experience from discovery to browsing to quotation to the claim and so on, right? And in fact, interestingly, the way that they look at Hong Kong, right, they actually ranked Hong Kong quite high in the front end experience. The user experience is pretty good. But then something that we need to improve is more on the back end side, because on the back end, in terms of claims, in terms of some of these service and validation, right, it still require lots of offline actions and sometimes agent supports. So in order to be a truly fully digital first player, there's several challenges. One of them is the legacy systems. I think this is something that the traditional insurer have to improve, the struggling with some of the outdated systems. I guess we as a virtual insurer, we're born on the cloud, 100% cloud based. So it's a lot easier to address these issues. Another one will be the end-to-end digitalizations. As I mentioned, if some of these claim or backend still require offline support, right? There's still a lot of work to be done to integrate with the ecosystems. And sometimes when I look back, right, if we rely too much on agents, sometimes we're focusing too much to build the technology for the agents to serve the customers, rather than building the technology for the end customers to empower them to do it themselves. So overall, right, I would say digital transformation is hard. It's not just because of technology. It's a big part of that is to upgrade the legacy systems. Another one is the end-to-end digitalizations, automations. The last piece, which is also very important, is how do we educate, right? Changing consumer preference. I think we all have a role to build trust, to educate the consumer, and how do we empower them to understand the needs and find the right product online. I would say we still, for our industry, the transparency is still very low. Like I hope to see that we can have more information online so that people can make decisions. So I think these are some of the areas where if we can adjust, then we'll certainly accelerate the digital adoptions.
Fantastic, thank you very much, Fred. And I think it aligns very well with why we promote digitalization of the industry, as Damien came across in his presentation earlier. And I remember we had a very thorough discussion in one of those working group meetings highlighting the need of addressing some of the pain points in the back-end operation in terms of digitalization. I love how you use the word empowerment of agents. Then that is really the way forward. So here we don't want the technology to replace the agents, so to speak. We want to empower them, allow them to do things a lot more efficiently going forward. And last but not the least, I also enjoyed how you share that going along the customer journey is going along with the customers along the journey is very important. Like changing their behavior, changing their preferences will take time, and we have to handle them going forward. Well, in terms of opportunities for the industry, now perhaps we have addressed some of those serious pain points, or why we are dealing with this paper. Now let's move a step forward and look at the opportunities for the industry going forward. And I would like to turn to Winnie first. Winnie, really, when it comes to opportunities for the industry, Hong Kong does present to them quite a bit of opportunities, but there are also customers from the mainland and overseas market. How would you look at the aging population issue here in Hong Kong, but also on the mainland, as we are seeing quite a rapid change in terms of average age as well as life expectancy. What are some opportunities that we can look for in this regard?
Yeah, thank you, Rocky. We are in the risk business, as you can tell. Whenever there are challenges and risks, our industry can play a very important role in addressing them. Aging is definitely a huge challenge for Hong Kong as well as the mainland. I believe that there are opportunities for both Hong Kong and mainland insurers. For Hong Kong insurers, I can already see some new products in Hong Kong by our innovative insurers, facilitating some of the medical services in the Greater Bay Area, particularly for the underserved segments, of course, including the elderly. A lot of our aged population, they are already going to the mainland after retirement, living there, or traveling a lot in the Greater Bay Area. So these products can definitely help them. And our VHIS also cover the grade 3A hospitals if they get hospitalized in China. And some of the northbound medical services that we can see in the market cover some of the medical services that would take a long time to line up at public hospitals in Hong Kong. So I really believe that these products can help these underserved segments, particularly the elderly, to enjoy quicker services when they go to the GBA or northbound to the mainland. On the other hand, it's two-way. In China, in the mainland, there are also a lot of challenges of aging and medical cost escalation. So, and especially in view of the recent medical reform, moving to DRG in China, there's definitely bigger demand for commercial medical insurance protection, as well as foreign medicines. So there will be a more limited supply of medicines and some of the ongoing medical follow-up services by public hospitals in the mainland. So a lot of these customers, especially those who need longer-term care, i.e. the elderly, as well as some of the customers who can afford better services, better medical services, would opt for commercial insurance cover that can facilitate them to come to Hong Kong, not only for second opinion, but also for some of the medical treatments. So I really think that it's two-way, giving opportunities for both Hong Kong as well as mainland insurers, as long as we can be innovative in facilitating different customers to enjoy the medical services that they need. Particularly the elderly will be a huge segment that our industry has been working a lot on.
Fantastic. Thank you. Thank you so much, Winnie. I really enjoyed how you put it into perspective. We are in a world of being in a polarized world, but then, like here in Hong Kong and, in the Greater Bay Area, we can leverage the best of both sides, best of both worlds. We can utilize, the facilities and like manpower on the mainland, and at the same time, we can help, policyholders on the mainland to utilize the medicines that's made available to us in a more international market. That is very important for potential customers on both sides. Now, Damien, you mentioned in your presentation that a lot of the, and actually your answer to my earlier question that the Southeast Asian and Middle East, as well as the mainland Chinese market would be very important. I guess my question is, how can these insurers leverage our unique proposition or unique positioning of our city, being an international financial center with a free flow of capital, with the free flow of information, etc. How can insurers leverage such advantages?
Yeah, thanks, Rocky. I think in terms of opportunities, you have just really pointed to the key one, and that is, Hong Kong is a recognised international financial hub for both institutional and retail financial services solutions, and in insurance, specifically for retail financial solutions, we can see the dominance of mainland business in the insurance sector in Hong Kong over decades now, which is a great thing and will continue. I think what's important is not just leveraging Hong Kong's status, the willingness of regulators, private sector insurers and other stakeholders to continue to foster growth of Hong Kong as a hub for offshore investors or policyholders to seek solutions, but to also focus on new subsegments. And I mentioned earlier, I think high net worth and ultra high net worth is very, very important. I think it's worth noting the Hong Kong government has been expending considerable resources, time and effort in working with the private sector on expanding Hong Kong as a domicile for family offices, for example, as a place for ultra high net worth and high net worth individuals to seek solutions across the full spectrum of wealth investing. And indeed, insurance presents an enormous set of opportunities in terms of legacy planning for high net worth and ultra high net worth individuals. So this is an area that I know many insurance companies are focused on. I think they should be encouraged to continue to do so. And there needs to be support to diversify into other high net worth geographic segments. And I mentioned Southeast Asia, Rocky has mentioned that too, in the Middle East. I think just going a little bit deeper on mainland Chinese visitor business, obviously continuing to focus on sustainable practices and driving growth there is important, working with the insurance authority across the private sector. Beyond that, I would note that the Hong Kong Federation of Insurers has recently recommended that there should be consideration of the PLP, the protection-linked product, being an included product in the Wealth Connect scheme. I think we've touched on that in the paper, but we did not seek to repeat that in the recommendations. But if that has not been pursued by the HKFI, we would be recommending that. Also, I think it's a small step forward. It's a safe step forward in terms of cross-border capital flows, very well protected. PLP is a terrific product. It's differentiated and is a great solution for our mainland counterparts. So I would personally encourage all stakeholders to continue to focus on the HKFI's representations in that regard. The other two things I'd just like to mention by way of opportunity is customer and agents. I think we can't forget the customer in this conversation. And I think, frankly speaking, when it comes to health insurance and auto insurance, all stakeholders in the ecosystem need to come together to collaborate more on data sharing and handoffs to make the customer's experience much, much, much better. That's covered primarily in our first recommendation. And to Fred's point, when it comes to agents, I think Hong Kong's insurance agents are renowned globally for their professionalism and for driving Hong Kong to be a global insurance hub, which it is today, the leading insurance hub globally. I think it's important that as insurance companies work with other stakeholders to drive end-to-end digitization, we will free agents up to stop carrying paper and dealing with paperwork and doing what they want to do and should do, which is to consult their customers, support their customers in terms of financial planning for their future wealth, health, and retirement needs. Thanks.
Fantastic. Thank you. Thank you very much, Damien. I think the mentioning of high net worth and ultra high net worth segment really resonates with a lot of the people in the industry, but also those in the wealth management industry. And it aligns very well with the Hong Kong SAR government's intention to develop Hong Kong into a family office hub, which is led by the Financial Services and the Treasury Bureau. We can also see how, the cross-border practices and agency being mentioned. I really enjoyed your sharing. Thank you. And Fred, you mentioned that digitalization isn't really a simple process. It's not like we wake up one day and then the insurance industry becomes fully digitalized. So for perhaps a lot of the work has to be done by having some cross-sectoral collaboration and interaction with regulators, departments, and many other tech firms and whatnot. So perhaps you can share with us some best practice that you have witnessed in some other jurisdictions, not necessarily in Hong Kong, not necessarily in Asia, but perhaps you can highlight some of those examples.
Thanks, Rocky. And I guess the cross sectors is important. One way to look at this is from an insurer perspective, right? We actually know very little information about the customers. There's several ways to look at this, right? When we do underwriting, right, we still rely on the manual process, medical underwriting, require physical body checks. When we relied on agents to gather the information, not all of them are documented. Sometimes the information they may not pass back to the back end for underwriting, for really understanding the holistic risks. There might be data about like lifestyle habits or credit score, something that might be interesting to the pricing, to the underwriting, but it's not passed back to the back end. And another example is if we use health and motor as an example, right? Claim processing is slow, sometimes it's complex because of the reliance on the healthcare provider and the hospital for the doctor reports to get the official documents for all these investigations. So I guess the point I'm saying is sometimes it's difficult because we are working in silo. It's because if insurer operating in isolation, right, then we're not sharing enough, we're not leveraging data enough from other stakeholders. That is a big limitation to efficiency and a big limitation to innovations. And if we think about the role of cross-border initiative, if I may focus on health, healthcare is involved across sectors and functions. And it's a collaboration between insurer as a payer and also a healthcare provider. If we can break down the data silo, right? If we can, let's say, imagine collaborate with the hospital, collaborate with the healthcare provider to access data. That's why Statement mentioned about the digital ID system, right? The I'm Smart for instant checks, for automated claims, and we have the e-health for real-time validations, for fraud detections, right? I'm not an expert in other jurisdictions system, but then imagine if we can have a national level of e-health, if we have this centralized health insurance database, it really allows us to access good information. It will transform the way that we do underwriting, do claims, and also do customer engagement, because now we get a lot more data, not just from the one that we connect on our own channels, but also from other parties. So I would say the cross-sector collaboration is important because we need to break down that silos. And once we have that, then it's a lot easier to drive transformation with real data.
Fantastic. Thank you. Thank you very much. It's very important. I can see that, like the health department, the police, for instance, would be relevant to some of those topics that you have covered. And we look forward to seeing a more joint up effort, across different departments and bureaus. Well, Archus, I would like to turn to you in relation to climate change. You already mentioned that climate change is posing some risk to the economy, but also presents some opportunities to the insurance sector. How can Hong Kong insurers develop more innovative products and risk management strategies to address climate-related challenges and enhance societal resilience?
Right, thanks, Rocky. As mentioned just now, I think climate change and extreme weather events are getting more severe, and also the frequency is getting more and more. So in that sense, I do think that ILS, Cat bonds, is a good addition tools that enables insurers and reinsurers to transfer the insured risk to the capital markets through securitization. So this provides alternative capital sources to mitigate risk, because capital is not is scarce, and it is not as if we have unlimited capacity. So this is also a good way to go, and it also gives the opportunity for investors to get a decent return out of these bonds while participating in the climate change events. Another area that we can think about is transition finance. It's no secret that, for example, January is providing a float to the Berkshire Hathaway Group. So insurance and reinsurance companies are collecting premiums, and those monies need to be invested. So I'm hoping that under the RBC, of course, green bonds are one factor that is already incorporated, but let's not stop there. Can we do more in terms of maybe investing into projects that is related to, sustainable projects in renewable energy, water management, or even energy efficient housing and buildings and so on and so forth. And I understand that some insurance companies are also integrating transition finance considerations across their entire value chain, as well as product offerings. So in that sense, I would say that insurance industry plays a very big role in achieving net zero together. Yeah, so hopefully this can become some industry best practice so that we can foster this very important goal. Another issue is that, of course, we always need to refine on our modeling in order to come up with better priced products for the market to absorb these kind of climate risks. But then it's not easy, because you can also incorporate technology nowadays. So in terms of, for example, flood warning, so that it can be a win-win for both the insurance companies and also the insured. But I must say, there's still a lot of elements of public awareness and education that we have to do. For example, I think everyone would probably remember that we have a prolonged black rainstorm warning last summer, and it resulted in a lot of motor damages. But unfortunately, a lot of our customers had only got third-party protection and not comprehensive protection. Yeah, so in a way, yes, there are solutions that can be provided by the industry, but our customers also need to understand what is available and make sure that they choose the right products in order to get protected.
Fantastic, thank you. Thank you very much. The risk needs to be securitized. Asset securitization is extremely important, and that explains why the FSDC has actually written a couple of relevant papers in this regard. And I think the need of visiting how RBC can be used to play to our advantage should also be explored. Thank you very much, Marcus. I noticed that we are running a little bit short of time, but let's try to answer some of these questions more quickly. And as a result, I would like to turn to Damien first. And staying on the topic of transition finance, how can we enhance capacity building among insurers and leverage insurance capital to enrich the sustainable investment arena?
Yeah, thanks. I mean, I think that the paper and the set of recommendations around insurance capital really answer that question, and that is that providing more incentives. Firstly, I think that there's realizing that insurance capital is meaningful. I think you had mentioned in your introduction that it represents about 10% of total AUM in Hong Kong, and that is not an insignificant sum there. So firstly, recognizing that it's not that it's there and that it's not it doesn't get a free pass in terms of the importance of transition finance. But obviously, the RBC framework is key to this. RBC is a global standard in terms of risk management. The IA has implemented that very well along with the industry. There's always teething issues, and I know there's conversations around those things, but RBC is the vehicle. So to get this capacity increased, I think we've got to take a hard look at RBC to see whether we can extend the incentives beyond the one incentive that's there now for with the 10% capital credit for approved green bonds into other areas. That's not easy to do, because ultimately RBC is about protecting customers' interest to ensure insurance companies can be financially resilient in any extreme circumstance. But I think almost every industry practitioner on the investment side of these businesses would see opportunities to extend into climate finance. And so I think that's very important. RBC is probably the simple answer to that question. We've got to take a look at incentives.
Fantastic. Thank you. Thank you very much, Damien. And I'm going to turn to Winnie on a relevant subject, and that is about the insurance-linked securities, ILS. So the pilot ILS grant scheme has been introduced in Hong Kong for a few years, and 6 catastrophe bonds have been issued since 2021. What incentives or measures could the government or regulators in Hong Kong offer to create a conducive ecosystem for developing the ILS market?
Yeah, thank you, Rocky. First of all, of course, we welcome the support as well as the recent extension by the government and the IA on the pilot grant scheme for another 3 years. After all, it's an ecosystem play. We need to build a more comprehensive and business-friendly ecosystem in order to make it more sustainable. So first of all, I think it's how we can attract capital as well as investors through various education. Education involving family offices, of course, institutional investors, and various distribution channels and high net worth channels and all that. And we need them to understand the ILS products better so that they can promote it, and what the benefits would be a very good diversification from the traditional or normal investment vehicles or products. So we need to reduce the barriers to entry and build more local expertise. And hopefully there will be more investors in Hong Kong as well as from the Asia region. This is something that we aim to achieve. And the Insurance Authority has conducted some workshops and seminars for these investors. Hopefully there will be more going forward, and particularly around the local community as well as the business sectors, banks, etc. And we also need to develop local asset management capabilities and how we can incentivize these fund platforms and gatekeepers, because they will be very crucial in introducing the products and providing incentives to like private banks, fund platforms and investment consultants would be areas that we can consider. And also how we can broaden the fund offerings, expand the investor base and align the ILS offering to with the global best practices and increase the accessibility for more diverse investor groups. And of course, we also need to find some ways to incentivize some of the fund managers to establish a more local presence, because we do want them and encourage them to come and establish the expertise in Hong Kong. So we need to better align the subsidies and grants to focus our resources on the initiatives that provide greater local economic benefits and foster a more sustainable and vibrant local ecosystem in Hong Kong on ILS.
Fantastic. Thank you. Thank you so much, Winnie, on explaining how we can beef up our ILS ecosystem. Now, Fred, I see that there are a lot of questions coming in. I also wish to ask you this question that is about digitalization, because it is you guys are a fully digital platform, and ensuring consumer trust is very important. So how do you guys come about and doing that? How can you foster the growth of a fully digitalized platform and at the same time maintain robust data security and privacy standards?
Well, I think a part of trust building is related to transparency. Again, like if we're being perfectly transparent about, for example, what is covered, what is not covered. Sometimes some of the mis-selling happens, some of the complaint happen because people just simply don't understand. And I think we have the responsibility to actually educate them. Yes, sometimes some of these claim statements, some of these disclaimers are actually very long. That is hard to change, but that doesn't stop us from writing a more human version to actually let people to fully understand it. So I think there's still a lot of work to be done in providing that transparency. And another thing I want to mention here is about AI as well. Like AI is evolving so quickly. And in fact, I believe a lot of us actually benefit from AI in actually doing research and learning. But even though AI is not a key point of this paper, but I would say in order to adopt AI, we need to get the data and the end-to-end digitalization ready. Because if Damon mentioned, if we're still carrying paper and then doing it manually, there's no way that we can adopt the future AI evolutions.
Fantastic. Thank you very much, Fred. As a matter of fact, we have highlighted some of the companies in Hong Kong that are quite successful in dealing with AI, and it's in the paper. So like if you're looking into some of those solutions, do look at it. The last of the questions that we have, from both from the floor and as we have prepared, perhaps is for watchers. I guess going forward, there are a lot of development that needs to be done in order to propel the insurance industry. Now, what can the public and private sector do together in order to do that, and how can the government incentivize some of the collaborations between insurers and other stakeholders?
I know we're running out of time, so I just want to touch on one subject, digitalization, because this is very dear to my heart. Unlike some of the virtual insurers that we have a lot of traditional insurers in Hong Kong. So really to have an end-to-end digital journey for our customers is no easy work. So in that sense, government incentives and resources would be very important for us to make this happen. And it is not only for us alone, because to be honest, if you're hospitalized and you need to make a claim to your insurance companies, is your hospital going to provide some digital information directly to the insurance company so as to facilitate your claim? No, unfortunately not nowadays. It's more or less coming in paper format in terms of the stack of your hospital bills. which you have to then submit to your insurance company, and the insurance company has to, based on all the information on the paper, get those information into the system in order to pay the claim. So imagine if we're a smart city, this should be digital. So I'm looking forward to one day we achieve that.
Thank you very much, Rogers. I guess that summarizes why we have to put digitalization as a main theme and the crux of our paper. That is, a collective effort between the public and the private sector. To this end, I thank the close to 200 people of you staying through. We lost 10% of you, but we want the remaining 90% of you to stay with us, and as we pull up the polling to receive and collect your feedback. So once again, I would like to ask you for your favor to thank our panelists for joining us today, and for the working group members who aren't with us today but supported us throughout our work. So thank you very much for joining us.